All right, this is our last chapter of brand new notes. And so we are doing chapter 9 now. And so let me go ahead and pull that up. So let's open up our chapter 9 notes. And this is our very, very last chapter. And so let me go to, I need to go to the online classes version of chapter 9 notes. Okay, so what we've got here, this is the very last chapter. Can you believe it? And so this is going to be posted in week 7's homework. And so what we've got is looking at the government-wide, like as a whole, looking at like the reporting at the government-wide level, and looking at transactions that involve multiple funds. And so this is just kind of a review chapter, which is a nice chapter to end with. And so it talks about the CAFR some more, which is something we've been pretty familiar with from the beginning. And so we worked really hard at that early on, and then just reviews some entries that involve multiple funds. So this is kind of review, talking about like the reporting entity and component units and when things need to be considered major funds and things like that. As far as the CAFR goes, there's just some review here. There's the 3 sections: introductory, financial, and statistical, and the things that are included in each. And you guys actually are working on that right now for your individual cities. So as far as government-wide financials, you do a statement of net assets, which is like a balance sheet, and a statement of activities, which is like an income statement. At the fund level, we have our different financials. And so this again is review. It's a great time to review because we're getting ready for our final. So at the government-wide level, we have these 2 financial statements. At the fund level, we do a statement of revenues, expenditures, and blah, blah, right? Changes in fund balance, and then we do a balance sheet. For proprietary funds, we do a statement of revenues, expenses versus expenditures, and changes in net assets rather than fund balance. And then we have a balance sheet, which is called a statement of net assets. And then we also do a cash flow. And so the cash flow is using not the same rules as GAAP, but kind of. And so there's some differences about like where you put interest and things like that. And then the fiduciary funds, we only have 2 financials. We do a statement of fiduciary net assets, which is like a balance sheet. And this is kind of like a changes in equity. There's not an income statement because they're just bringing in money and then giving it to someone else. And then we have our notes. And so the rest of the notes here, which isn't very much, is just kind of walking through some entries that affect multiple funds. And so we're going to go through and we're going to do those. And then we can take a look at your homework for chapter 9. So I did 2 chapters, but they're both very short, and that's why I combined them into one. So 1 week. So question number 1, $25,000 was dispersed from the general fund for the purchase of new equipment. So this is just an entry that impacts one fund, but just reminding you about what happens when the general fund that uses the modified accrual basis buys a long-term asset. Nothing is considered long-term at the fund level for governmental funds. So we would just call this expenditures and cash. At the government-wide level, we would go ahead and record it as equipment. All right, so next one. An unrestricted operating grant of $100,000 was received from the state. And so this is going to be the same at the general fund level and government-wide, except for at the government-wide level, instead, you would add the word general in front of it. So we are receiving money that is an operating grant. So what we'll do here is we'll just have cash and revenue. And so we, instead of revenues, sometimes we'll call that OFS grant. And so, but remember, OFS is other financing sources. And so if it's an unrestricted grant, we usually just put it in regular revenue because it can be used for operations. So it's just basically revenue, right? So then it says general obligation bonds with a face value of $1 million are sold at 101. 101 means it's selling at a premium, meaning we're going to get a little bit of extra money. That extra money is probably going to be given to the debt service fund. So let me go ahead and delete this one. Okay, so what we're going to do here is where it says general obligation bonds. And so for the capital projects fund, they're going to receive the money and they are going to get to keep the $1 million. And then the extra, so the extra 10,000 That's weird. So this will be OFS bond proceeds. And then this cash will be due to debt service fund. Right? And so I guess it depends. Did that go directly to them? This is required to be used solely for the construction of a building. So if we constructed the building, we could do something different. Here, we're going to get this money. So let's just say, I don't sure exactly what they wanted me to put in here. So I say they, it's me. I'm the one that wrote them. Okay, so this 10,000 will go here. And so they get to keep this money. And so, and this would be OFS bond premium. So as far as this entry, I'm trying to decide if they wanted me, if I wanted, I shouldn't hit delete so fast, but that's okay. It doesn't matter. So if we went ahead and constructed the building, we could do construction expenditures. But before we did that, we did capital projects fund entries before. Before we did that, we would do like encumbrances and reserve for encumbrances. So, but eventually we would pay out the millions. We can do that for now. And so it would just depend, like that's kind of the kind of entries you'd see at the capital projects fund. But at the government wide level, we would get the cash of 1,010,000. And then this would be bonds payable. And this would be premium on bonds payable, just like we would in financial accounting. And then I guess here, if we went ahead and did the construction expenditures, we could do construction WIP. Or if it was done, then you would put it in buildings. So while you're building it, you put it in construction WIP, and when you're done with it, you move it to buildings. All right. That is it, my friends. And so why don't we jump over to here? And so you'll have a little bit of multiple choice for chapter 9, but not much. I only listed 7 and I told you to ignore number 5. So you only actually have to do 6 of the multiple choice. And then you're going to do this problem, which is problem 918. And I skipped over number 4. So you're going to do 1, 2, 3, 4, or no 4, 5 to number 9. 10. And so you're going to do the fund entry and government wide on this one. You're going to do the capital projects fund entry only. You're going to do an internal service fund. What does it look at the enterprise fund? What does it look like at the general fund? And then I did government wide for you. So you're just looking at multiple funds and transactions that involve multiple funds. So, you know, you might do budgetary entries at the fund level, but not at the government wide. And so you might do the same entry in both. You might look at what would happen at the general fund versus internal service. And so I want you to practice these. And so I hope these go well. Chapter 9, super short, almost all review. So just kind of looking at transactions that involve multiple funds. And so, all right, so your homework for 8 and 9, super quick, just a multiple choice and a problem from each. And so this will be the last homework you guys do for the semester. So, all right, have a good day. Thank you.